What's going on? Welcome back to the Financial Freedom Show with Chase Lawson. For those just tuning in, my name is Chase Lawson. I am a personal finance fanatic and the author of the best-selling book, Financial Freedom, Breaking the Chains to Independence and Creating Massive Wealth, which is available on Amazon. Today I wanted to address a very important topic that has come about lately that a lot of people are confused about and don't fully understand, and that is that of the payroll tax holiday that just recently went into effect. If you're listening to this episode and you're in America, chances are you've heard about President Trump's payroll tax holiday, and you may wonder what exactly that entails. And this episode comes at a pretty opportune time, as many of you probably were just recently paid or are about to be paid, and you may have noticed a slightly higher amount hit your bank account. And that may be a direct result of this payroll tax deferral plan. But I must advise you that this is not what it may seem to be, and so please pay attention to this episode, as I want to make sure you don't screw yourself out of money and are put into a tricky financial position in a few months' time as a result of this payroll tax holiday. So the payroll tax holiday went into effect on September 1st, 2020 and runs through the end of the year, or through December 31st, 2020. This was part of Trump's executive order in early August. Within the U.S., most employees are responsible for what is known as FICA taxes, or Federal Insurance Contributions Act. This has been in place since 1935 and includes Social Security tax and Medicare tax. Currently, U.S. employees are taxed at a rate of 6.2% for Social Security and 1.45% for Medicare, and employers match that amount, meaning a total of 15.3% of your income goes towards FICA taxes, 7.65% from you, and 7.65% from your employer. The payroll tax holiday is for workers who earn less than $4,000 biweekly or $104,000 per year. For those who this does go into effect for, their employer can essentially choose to not withhold the 6.2% Social Security tax from their employees who are below that income threshold. So if you earn $4,000 per month, this would save you $248 per month from September through December, or $992 total. However, keep in mind it is up to your employer as to whether or not you participate in this plan. Many businesses will not participate either because they lack the software to do so, or their payroll service has no method to do this. Do keep in mind that once again, it is up to the employer to choose whether or not to participate, and they may or may not seek your input, especially if you work for a larger company. They may either opt everyone in or opt everyone out. So let's just assume that your employer chooses to participate and opts you into the plan. In this instance, you will start seeing slightly larger paychecks. That's good, right? Well, hold on just a second before you go out and start spending that money, because you're probably going to have to give it right back. What the current guidance from the IRS advises is that these payroll taxes that are not collected through the end of this year are just deferred to next year, and employers must pay the deferred taxes by April 30th, 2021, or they'll face penalties, interest, and additional taxes. What this means in practice is that those employees who are enrolled in this plan, whether or not they themselves choose to opt in, will end up having to pay double towards Social Security taxes in the first 4 months of next year, from January 1st to April 30th, 2021. So while you'll pay 6.2% less in taxes the remainder of this year, you'll be on the hook for 12.4% towards Social Security in the first 4 months of next year, meaning your paychecks for early 2021 will be smaller than you're used to. The net result will still be the same. This payroll tax holiday just defers when you are responsible for paying your half of the Social Security tax. However, many people live paycheck to paycheck, and what comes in goes right back out. So if you do find yourself bringing home more, and this is due to no money coming out for Social Security, which will be listed on your pay stub, be sure to keep that excess in a safe and liquid account like a savings account, so that you have access to the money in early 2021 when your paychecks are smaller. Don't treat it as a windfall of cash and go out and buy yourself all the latest cool toys, as you may be unable to get by in January through April if you don't already have money set aside in savings and in an emergency fund. So why was this order passed in the first place if it doesn't really change anything? Well, this was put into place mainly due to the economic hardships imposed by this coronavirus crisis we're experiencing. Congress is not coming to an agreement on a second stimulus check, and many are struggling to get by currently. So it's a way to put more money in Americans' pockets to help them get through this pandemic. However, the challenge then becomes how to educate people as to what this really means. So if you're listening to this, kudos to you for educating yourself. Please make sure to share this with others as well so that they understand what it means. There is a chance that Congress could decide to forgive the amount deferred, in which case employees who did participate won't have to repay the amount next year, but that is not currently likely and should certainly not be counted on as an expectation of happening. So while this payroll tax holiday is good in principle, it's not as good in practicality, so just know that it is not free money and you will have to pay it back next year. Thanks so much for tuning in to today's episode of the Financial Freedom Show with Chase Lawson. I hope you enjoyed it and learned something today. If you do see your paycheck increased due to Social Security not coming out, make sure you keep that money set aside so that you aren't in a predicament next year. Please let me know if you have any further questions on this topic, as well as comment with any thoughts and feedback you have, or if there's any other financial topics I can cover for you. And as always, please be sure to like this episode or leave a review if you got value out of it, and make sure you subscribe and share with others so that you and your loved ones can all stay up to date with the latest content. Your feedback means the world and is super important and helpful, so thank you all for your help and support. Thanks so much, everyone, and until next time, stay safe and go get 'em.